Hello guys, welcome back to my channel. This is Soji and you are welcome to Soji Forex. To all our new subscribers, we want to say thank you for subscribing to this channel. You are welcome. What we do basically on this channel is that we share ideas on the financial market. We backtest strategies and we come to share with you how you can take advantage of these strategies to become profitable in your trading. So I'd like to encourage you that you go through the previous videos on this channel so that you can benefit maximally, because every video is an add-on to the previous video. So basically in our previous video we talked about how we can make an entry and exit on our trade. So this is an add-on to the previous video. So this is an entry and exit, and this is part 2. So please, I want you to pay attention, and we are building on our candlestick formation for entries, which we make about few days ago. So you can go through it, and we said two major candlesticks that we use to validate our entry is a bullish or bearish engulfing and then a pin bar. And we have discussed extensively how to identify these candles in our previous videos, so you can do well to watch those videos. So today we want to look at how to make our entry and our exit. Remember, regardless of the method of trading you are making or you are using, it all boils down to the same thing. The essence is for you to make money. So in this video, every trade begins from either a support or a resistance. It is either starting from another block or is starting from an imbalance or improper price action, as you may call it, or as the terms is being known to you, and as well as supply and demand zones. So basically, let's assume that this trade, we'll begin our entry from this point. Okay, let's assume that this is our entry. This candle is our entry. Now, upon this entry, the next thing we do, let's shade it. Yeah, so the shaded portion is our entry. Now, once you make this entry, depending on where you are making this entry from, let's assume it's our area of support. Okay, let's assume this level is an area of support. And once you have an area of support, you are waiting for a particular type of formation. So in this area of support, you need the market to reject from this point. And from here, we have a rejection of a hammer. Upon the confirmation of this, we make our entry at the close of that candle. Then our stop loss is 15 to 20 pips below that candle. So now that we have made our entry, the next thing we need to do is for you to draw your trend line. Remember, as at when we make this particular entry, all this move here are not formed. So the only thing we see at this point of entry is only this candlestick which gave us an entry. So all you need to do, you place your trend line from there and then draw it, because already you know how the market moves. So when you draw it this way, you will be expecting the first market movement. And if you observe, you'll see that this first market begins to move in this direction, which is all this movement you are seeing in the upside. And then it comes back, tap into this zone. Now, if you use your Fibonacci, you realize that this zone here is almost our Fibonacci zone. Great. So let's fib here. You'll see that the price returned to almost 60.8% revision of this Fibonacci. So any valid candlestick pattern you get here works, and then you get another candlestick pattern, your stop loss is below, and then you see that move. Anytime price comes, so what will be your exit? Your exit will be when price break out of this trend line, just as we have here. Now this is your exit. This shaded portion, why? Price broke out of it, closes below this trend line, and immediately this happens, it becomes your exit point. Okay, so it's just like a rail track. A train will always pass in between the rail. It cannot move outside the track. So in the same way, price doesn't move outside the rail. So you see that when it moves here, it tap and come down. I am not saying you sell from this point. No. You are following the trend. You are following the structure. And you will see that here, this is our low. This is a high. This is another low. This is a higher low. See your higher high. Another low. Another high. Low, high. So this thing continue until you have a break of structure. A BOS, which signifies that there is a reversal. So once price break out of your trend line, you exit. But remember, you are not trading this in isolation. You first of all begin by going to your higher time frame, probably your daily time frame. Okay. This is a daily time frame. This cannot work. Okay, you see, you mark out your support and resistance. This will, remember, this is an entry and exit rule. This is not a trade analysis rule. This only teaches you how to enter and manage your trade. Okay, which means you are not just going to jump in. You are making your entry either from a point of support, resistance, order block, demand, or a point of imbalance, depending on what is your entry strategy. But this guide will help you not to exit your trade before time. Okay, you can see this is GBP USD. Remember, in our previous video we have a pattern. This is a double bottom. You see this engulfing candle, right? Then what do you do next? Next thing is you draw your trend line, and from this your trend line you will notice how price will go, come back to it, give you another engulfing candlestick, another entry, come back, give you another engulfing candlesticks, another entry. Or it is coming back to retest the other block. You make your entry, come back into this other block again. Okay, so this, the goal of this video is just to give you a guide on your entry and exit. So you draw your trend line. You will only exit if the price come back and closes below this trend line, or if the price come and take the liquidity of this low. What am I trying to say? In an uptrend, price is permitted to take the high, but it is not permitted to take the low. But it can take liquidity of the upside and not liquidity of the downside. So you maintain this continuously. Okay, now you might be wondering that how then do you know that price is beginning to make a reversal? Now let me give you a simple scenario of how to know that price is actually making a reversal. I don't intend this particular video to be long, but let me be fast and be quick about that, so that you can know how to identify a trend reversal. Now let's assume that you have missed this entry from here, and since you have made this entry, this is an order block. This is a structural point. Okay, so all you need to do is for you to carry your Fibonacci, and then you will fib this zone. If you are doing week to week, you maintain week to week, and if you are doing the body of the candle, you maintain it body to body of the candle. Now, how do you know that the market has reversed? When price moves up and it begins to return, which is reversing, coming down, the way you confirm that there is a reversal has commenced is when the price closes below 23.6 level, 23.6 level of the Fibonacci. It means reversal have commenced. But let's assume the price come just around this zone and then turn back and continue to the upside. it is not a reversal. It is not a reversal. So that is a simple way to identify reversal. Let me try to illustrate this in a more broader terms. Yeah, okay. Let's say we are having, I don't intend this video to be long, higher high, okay, price went up, it came down, went up again, came down. Whatever we do for an uptrend, the opposite is for a downtrend. Went up again. Now, you will know that these are your structural points. Okay, in smart money we call it a range. You must know your range. Very, very important. That as a trader, you must know your range. So your range is this leg that moves from here to here. So your fib is on your range. Great. So now to identify the reversal at top, I say now from here to here, this is your range. Okay? So that is how to identify your range. From this first level is your range in an uptrend. From here to here is another range. So what you are doing is that you are fibbing the range. Okay? So market has moved to the upside. Market has moved from this point now to the upside. So you need to know where to make the next entry. And for you to make this entry, you need to know that the market is already reversing. So to confirm this reversal, to know that it has started, you will need your Fibonacci. There's a video on Fibonacci, I recommend you go through it. And I'll make another one later. Now do you see that? So this range is from this level, this high, to this low. So now you will know that this market has begun to reverse. When price closes below, you can see 23.6. If price return and closes below, anything that bring price below 23.6 before going back to the upside is a sign of reversal. Once price return from up here and reach 23.6 is a sign of reversal. Reversal starts when price is below 23.6. After that level, you can begin to look for your entry trigger. But it is more economical since your stop loss, remember we say your entry rule is that you will put your trend line from this your first entry, which is here, right? So if you enter the trade from 23, your stop loss will be too far. So you want the price to come to a discount zone. Anything below 50%, header 61, header 78.5 of the Fibonacci. Anything from below 50 downward, you begin to look for entry trigger. Header a candlestick pattern, imbalance, order block, anything at all that is your entry trigger, you begin to look for it, then you make your entry. If not until price closes below this your strength line, below this structure, it is still a valid uptrend. So this is a simple way to identify reversal. So for instance, if you make any entry from this point now, this point B, okay, this is point A, this is point B, okay, this is point C, and this is point D. Any entry you make from point C to D, how do you know that a reversal have started? You will flip point C to D. You will flip point C to D, and once price begin to return and it reaches 23 level, if you have not exit from this point, please, it is important you begin to exit the trade, because it's a reversal. It will come back to any of this zone, then it will make an entry. But any entry you make around this structural point, around this your trend line, which this entry and exit strategy is guiding you on, is that price will have to close below this trend line, below this structural point, before you exit the trade. Otherwise, hold on to your trade, because your stop loss is actually below that structural point. I believe you are gaining value from this video. Please subscribe to our channel, share this video with your friends and loved ones, ask your questions in the comment section. And if there is any area of interest you want us to make a video on, please let us know. We are building a community of traders. The link will be in the description. Join the community. Once we hit 1,000 subscribers on YouTube, we will begin a weekly trade analysis. We'll begin to hold a boot camp for us in the group. And then, till then, see you in the subsequent video.